All right, so you guys wanted a deep dive on this beast of a topic, the U.S. national debt.
Yeah,
It's a big one, $36 trillion.
it is.
And today we're going to be looking at some expert opinions and projections to try to figure out, is economic growth really the key to taming this monster?
Right. And it is a question with a lot of moving pieces.
Yeah.
You know, you got some folks that are really optimistic about growth, sort of conquering all. And then you got other people that are a little bit more wary. And then there's a whole question of what kind of growth are we even talking about?
Exactly.
Yeah.
It's not as simple as just saying growth good, debt bad.
Exactly.
So let's jump right in. We've got a Hedgeye chart, a Politico article, and then a little bit more from Hedgeye all about this.
Okay.
Let's start with that Hedgeye chart.
All right.
It maps the U.S. debt to GDP ratio from 1965 all the way to 2054.
Wow.
What's the first thing that kind of jumps out at you from that chart, and why should the listener care?
Yeah. So, I mean, what jumps out at me immediately is just this projected spike in the debt to GDP ratio. It gets especially steep, you know, around 2030 and just keeps climbing.
Wow.
If those projections hold true, we're talking about a debt burden unlike anything this country's ever seen.
Yeah.
And that should worry you as a listener, because that could mean slower economic growth, higher interest rates,
Right.
less flexibility to deal with future challenges. You know, God forbid, like another pandemic or a major climate event, you know, we're just going to be
Right. Less wiggle room.
less wiggle room, less options on the table.
Okay, so that's the kind of downside.
Yeah.
But the Politico article we've got here highlights some pretty big names. You know, Jeff Bezos, Larry Fink,
Oh, wow.
even Trump's own Treasury Secretary pick Steven Mnuchin. They all seem to think we can just kind of grow our way out of this problem.
Yeah. I mean, there's a certain logic to that line of thinking, right?
Right.
A booming economy generates more tax revenue, which can be used to pay down debt.
Right.
We saw that, you know, in the Clinton years, for example.
Yeah.
Budget surpluses amidst really strong economic growth.
Right.
But it's worth noting that even then, it wasn't just growth alone.
Right.
There were also spending constraints and tax increases
Okay.
that were part of that mix.
So even a best case scenario where we have this crazy rapid growth,
yeah,
it might not even be enough.
it might not be enough.
And that's before we even get into like the downsides of some of the policies that might get us there.
Exactly.
Yeah.
The Politico article touches on some of that skepticism, too.
Okay.
You know, the economist Tom Percelli, for instance, argues that even sustained 5% growth, which is very ambitious,
Wow.
might not actually solve the problem.
Wow.
And then you got the specific proposals in the mix, you know, like large-scale tax cuts.
Right.
Historically haven't always had the desired effect on debt reduction.
Right. So we've got this kind of scary chart on the one hand projecting this sky-high debt.
Yeah.
And then we've got this camp saying, don't worry, growth is going to save us.
Yeah.
Where does this Hedgeye analysis fit into all of this?
Yeah. So the Hedgeye analysis really takes a cold, hard look at the numbers.
Okay.
And they're pretty sobering.
Okay.
We're currently running a $1.7 trillion deficit, which represents about 6.3% of GDP.
Wow.
You know, to put that in perspective, that means for every $100 worth of goods and services produced in the U.S.,
Yeah.
we're adding another $6.30 to the national debt.
Wow.
And a big chunk of that deficit is being driven by, you know, mandatory spending programs,
Right.
Social Security, Medicare, things like that.
Right. And as you said earlier, that debt burden could eventually trickle down to everyday Americans
It could.
in the form of, you know, higher taxes, reduced government services.
Exactly.
Which brings me to a question I was thinking about. Could focusing too much on debt reduction actually backfire and kind of hurt the economy?
Yeah, that's the tightrope walk that policymakers are constantly facing, right?
Yeah.
Because if you slash spending too aggressively, you risk pushing the economy into recession,
Yeah.
which would further reduce tax revenue and actually worsen the debt problem.
It's okay.
It's a very delicate balance.
Damned if you do, damned if you don't.
It really is.
So with all of that in mind, what are some of the specific challenges that policymakers face when they try to like actually
Yeah.
dig into this and fix it?
Yeah, so the Hedgeye analysis actually lays out a few key roadblocks.
Okay.
First, you got the Bird Rule,
Okay.
which essentially prevents you from making changes to Social Security
Okay.
through the usual budget reconciliation process.
Got it.
So that takes a significant chunk of potential spending cuts off the table.
So even if there was the political will to make those cuts,
Right.
which is debatable,
Which is a whole other can of worms.
we can't even really do it.
Exactly. Your hands are tied in a lot of ways.
What else stands out in terms of the challenges?
Well, then you've got the issue of those 2017 tax cuts we talked about earlier.
Right.
The cost of maintaining those over the next decade is estimated to be a whopping $4.5 trillion. That's $4.5 trillion that won't be available to pay down the debt or fund other programs or address, other pressing issues.
Right.
So that's a major challenge.
Yeah, and to make things even more complicated, you've got the whole tariff question,
Right.
which seems like it could either boost revenue or like trigger a trade war,
Yeah.
depending on how it plays out.
Yeah. I mean, the potential consequences of a full-blown trade war are really concerning.
Right.
The hedge eye analysis actually draws a parallel to the Smoot-Hawley tariffs of the 1930s,
Okay.
which are widely believed to have exacerbated the Great Depression.
Wow.
So it's a stark reminder that, protectionist policies can have unintended and really far-reaching negative consequences.
So it's a real mixed bag.
It is.
All right, so we've got this huge debt shrinking growth rate, political constraints on spending cuts,
Yeah.
and then this potential wild card of tariffs.
Yeah.
Is growth completely off the table as a potential solution here?
I don't think so. But I think the key takeaway is that it's not a simple fix,
Yeah.
relying solely on growth,
Right.
especially given current projections and, this complex political landscape.
Mm-hmm.
It's a really risky strategy.
Okay.
We need something a little bit more nuanced than that.
All right, so
Okay.
let's dig into that.
Okay.
What could a more nuanced approach look like?
Yeah. So what's interesting is the hedge eye analysis actually digs into some alternatives
Okay.
beyond just growth.
Okay.
You talk about things like entitlement reform, tax reform.
Which are often very politically charged topics.
Oh, absolutely. Those are the third rails.
Yes.
Everybody agrees we should do something, but nobody wants to touch it.
Yeah. What makes those options so challenging, and what are the implications for, the average listener out there?
Well, I mean, entitlement programs like Social Security and Medicare,
Right.
they're incredibly popular,
Mm-hmm.
politically sensitive. Any attempt to reform them, whether it's raising the retirement age or adjusting benefit levels
Right.
or means testing, is met with a lot of resistance
Yeah.
from people who rely on these programs. And, honestly, they have a point.
Right.
These programs provide a vital safety net for millions of Americans.
Mm-hmm.
Any changes could have a really significant impact on their lives.
So it's like we're stuck between this rock and a hard place.
It really is.
We've got this rising debt, but then we have these programs that people really rely on.
Yeah.
What about tax reform? Is that a more viable path?
Tax reform is another one of those thorny issues.
Yeah.
Some people argue that simplifying the tax code, closing loopholes,
Mm-hmm.
potentially raising certain taxes could generate more revenue,
Right.
help reduce the debt.
Mm.
But others worry that, raising taxes could stifle economic growth
Right.
or disproportionately burden certain groups.
Yeah, it seems like almost every potential solution has its own drawbacks
It does.
and downsides. How do we even begin to weigh those and make decisions about this?
Yeah. And that's where things get really interesting, right?
Yeah.
It requires, I think, a really deep understanding of the economic and social and political implications of each option.
Right.
And it also requires a willingness to engage in these honest, sometimes difficult conversations
Mm-hmm.
about priorities and values.
Right.
What are we willing to sacrifice in the short term?
Yeah.
For long-term stability, what kind of future do we want to build for
Right.
ourselves and for generations to come?
Yeah. Those are some really big questions, and it feels kind of overwhelming.
It can be.
But I think it's also important to remember that, we have a role to play in this too.
Absolutely.
As listeners, we can stay informed, we can engage in these conversations, and
Yeah.
we can hold our elected officials accountable.
Absolutely. We're not just passive bystanders in this.
Right.
Our voices matter. Our votes matter.
Mhm.
And the more we understand these issues,
Right.
the better equipped we are to advocate for policies that, we believe in.
So beyond entitlement reform and tax reform, are there any other kind of strategies out there that might be worth exploring? The hedge eye analysis talks about a carbon tax,
Right.
which seems a little bit out there. How would that even work?
Yeah, it's an interesting idea.
Yeah.
And it speaks to, I think, a growing recognition
Mm-hmm.
that economic and environmental sustainability are really linked.
Right.
The idea is you put a price on carbon emissions,
Okay.
which incentivizes businesses and individuals to reduce their carbon footprint.
Mm-hmm.
And the revenue generated from that tax
Yeah.
could then be used to, pay down the debt or fund other government programs.
So it's like hitting two birds with one stone.
Right, exactly.
You're addressing climate change and the debt.
It's a bold idea.
It is, but how realistic is it?
It's a tough sell.
Yeah.
There's a lot of resistance to the idea of a carbon tax,
Right.
particularly from industries that would be most affected by it.
Right.
But, it is gaining traction in some circles.
Mm.
And it highlights the need, I think, to really think outside the box when it comes to finding solutions.
Right. We can't just keep doing things the same way and expecting different results.
Exactly.
That brings me to another thought. What about the long-term implications of this for things like economic growth and innovation?
Yeah, that's a crucial point. We need to think about what kind of economy
Yeah.
we're building for the future, right?
Right.
If we're constantly struggling to pay off this debt,
Right.
we're going to have fewer resources
To do other things.
to invest in education, infrastructure,
Yeah.
research, and development.
Right.
The very things that drive innovation and long-term prosperity.
So it's not just about balancing the books today.
It's not.
It's about, investing in our future,
Exactly.
which I think is a good place to transition to the big takeaway here.
Yep.
If growth alone isn't enough,
Yeah.
what other strategies should we be thinking about? What are the trade-offs and the long-term consequences?
Right. That's the million-dollar question, isn't it?
Yeah.
I don't think there's a single easy answer.
Right.
But I do think that we need a more nuanced and comprehensive approach than just hoping for this magical economic growth.
I totally agree. And I think that's what makes this such an important topic to talk about.
It is.
It forces us to ask these tough questions
Yeah.
about our priorities and our values and the future we want to create.
Absolutely.
It's almost like we're at this crossroads, right?
Yeah.
We can keep kicking this can down the road and just hope things magically work themselves out.
Right.
Or we can start having some of these honest and maybe uncomfortable conversations
Right.
about what needs to change.
Yeah, and I think those conversations need to be happening at every level.
Yeah.
From, kitchen tables to boardrooms to the halls of Congress.
Yeah.
We need to be talking about this.
Right.
Debating the options, demanding more from our leaders.
One thing that struck me while we were prepping for this was this idea of intergenerational responsibility.
Yeah.
We're making decisions today
Right.
that are going to have a huge impact on
Okay.
future generations.
Absolutely.
It's almost like we're handing them the bill
Huh.
for our choices
Yeah.
and not giving them the tools to pay it.
It's a profound ethical dilemma.
Yeah.
We're enjoying the benefits of certain policies and spending programs,
Right?
but we're also passing on the costs
Mm-hmm.
and potentially limiting the options of those who come after us.
So with all that in mind, what can we as individuals actually do about this?
Yeah.
Besides, voting, contacting our representatives, which we should all be doing.
You should.
Are there other ways to make a difference?
Yeah. I think it starts with awareness.
Okay.
The more people understand the complexities of this issue,
Yeah.
the more likely they are to demand, responsible solutions.
Mm-hmm.
And that awareness can lead to action.
Okay.
We can support organizations that are working on fiscal responsibility. We can advocate for policies we believe in.
Right.
We can even, make changes in our own lives
Yeah.
to promote financial sustainability.
It's like think globally, act locally.
Yeah.
Maybe part of the solution is looking at our own finances.
Absolutely.
Making sure we're saving, investing wisely,
Yeah.
and not contributing to the problem
Right.
at like a personal level.
I think that's a really powerful idea.
Yeah.
It's about taking ownership of our own financial well-being,
Right.
which can then empower us to demand, responsible stewardship
Mm-hmm.
of our collective resources.
Maybe that's where the glimmer of hope is.
Yeah.
Not in some magic bullet solution,
Right.
but in like this collective mindset shift
Mm-hmm.
where we say, okay, this is a problem we got to tackle together
Yeah.
with this long-term vision
Absolutely.
and a willingness to make some tough choices.
That's right.
I think that's a great note to end on. This isn't just about numbers on a balance sheet. It's about the future we want to create.
Yeah.
It's about responsibility,
Mm-hmm.
sustainability,
Right.
making sure we're leaving a good legacy,
Yeah.
not just a bunch of debt for future generations.
Well said.
I feel like we've really unpacked some complex stuff today.
We have.
We looked at the scary projections.
The limitations of just focusing on growth
Mm-hmm.
and, some potential paths forward, even if they're a little bumpy.
Absolutely.
What I hope you take away from this is that this is a conversation worth having.
Yeah.
It's a problem worth engaging with.
Mm-hmm.
It's a future worth fighting for.
Absolutely. And with that, I think we can wrap up this deep dive.
Yeah.
But the conversation certainly doesn't end here.
Right.
Keep exploring, keep asking questions, and keep demanding more from yourselves and from your leaders.
All right, folks, that's a wrap for today. But as always, the journey continues.
It does.
Stay curious, stay engaged, and keep diving deep.